submitting any inheritance tax return, and then distributing your assets in accordance with the terms of the will. You will also can include personal things like funeral directions, and then it will look at your beneficiaries and how you benefit your nearest and dearest from your will. Your will can be drafted very flexibly, so you can include cash legacies, you can include specific gifts, you can take account of gifts that you've made during your lifetime, which might be relevant to when you're considering an annex. And you can also deal with loans and matters of lending in your will as well, if you want to sort of equalise things up with other members of the family. So it's very important to have a will in place. If you don't have a will, your estate will follow, it's called the intestacy rules, and it would be distributed in accordance with the intestacy rules. So if you don't have a will, you may have unintended beneficiaries of your estate. So that's just a brief overview of what a will covers. If we move on to inheritance tax, and I don't want this agenda to be too dry, but we'll cover the basics of inheritance tax, and then we'll also look at lifetime gifting as well. So you might already be aware of the inheritance tax rules, and obviously these may change now that we've got the Labour government, but currently inheritance tax is a capital tax, and it is a charge on the value of your estate over and above the tax allowances. And the current rate is 40%, so it's a very heavy tax charge. In terms of the current allowances, each individual has what is called a nil rate band allowance, and it is currently set at £325,000. Anything over and above that is taxed at a rate of 40%. The government also introduced in about 2017 something called the residence nil rate band allowance, which applies against your property where you leave it to direct descendants. Also, if you are married, you get the benefit of your spouse's tax allowances as well. So often in a will, if you leave everything to each other, then on the first death, your estate's exempt from inheritance tax by virtue of you being legally married. And you also would get the uplift of your spouse's nil rate band allowances on the second death. So currently, under the current government's tax rules, a married couple has a tax allowance of £1 million before tax is payable over and above that at a rate of 40%. So when we look at inheritance tax, we'll move on to the lifetime gifting, because this is where the scenarios around the annex might come into play. So people can give away assets from their estates, including cash or property, and provided the gift is absolute, it becomes what is called a PET, or a potentially exempt transfer. And if the gift is made and the donor, so the person making the gift, survives 7 years, then that gift falls outside of their estate for inheritance tax. Now, when I say the gift must be absolute, it means that the donor, so the person making the gift, has not attached any conditions to it, and they've not reserved any benefit from making that gift. Some people think that you can make a gift, but you can continue to benefit from it and it would fall outside of the estate, but that doesn't actually happen. So the government have these rules, and it's called gift with reservation of benefit, and there's also pre-owned asset tax as well, to get around people just giving their assets away and being inheritance tax free. So I'll link it to, obviously, what if you lived in an annex? Obviously we're aware that such living arrangements will benefit both parties. The adult children retain their personal space, but are on hand to provide daily care if needed, and the parent is reassured at having their child nearby and may then not need to go into costly residential care. The most likely scenario involves the parents selling their own property and gifting the child the funds to either purchase a new property with the necessary granny annex on it, so on the land, or possibly they would provide funds for an extension of their child's house with which the parent would then live in. So such an arrangement can be caught under these gifts with reservation of benefit rules by HMRC. And whether this is the case will turn on each specific set of facts and how the transaction is funded. Sometimes arrangements might not be classed with a gift with reservation, but they could trigger a liability to pre-earned asset tax, which is another form of anti-avoidance legislation, and it was introduced in about 2004. Pre-earned asset tax is a little bit different. So it applies where the donor, so this obviously in this case, the parent, if they've provided any consideration used to purchase land or other property, which then that person, the parent, would benefit from so that they would live in. And how it's worked out by HMRC, it's deemed as an annual income tax charge rather than an inheritance tax charge. And it's usually based on the open market rent that could be achieved if the property was commercially let. So ways around these sort of anti-avoidance legislation is where a parent can choose to pay the full market rent to avoid the gift with reservation or to avoid this pre-earned asset tax. Alternatively, the parent could retain an equitable interest in the property, so they could share the property with their child. And if they were to do this, it would have to be documented in what we call as lawyers a declaration of trust. So what I would suggest that is if you've got, you know, a scenario, you've got an idea of what you want to do, I would recommend that you speak to an accountant and a solicitor about your specific circumstances, just to see ways round of making sure that it doesn't fall within the gift with reservation or the pre-earned asset tax legislation. Another tax which might come into play is capital gains tax. So where you gift a property, you might be stung for capital gains tax. If you make a gift to your child, your acquisition value, so that the value that you acquired the property, will be taken into account when they receive that gift, and they may need to pay capital gains tax. So my suggestion as well is that you get property values before and after, and after any annex is built, so that you can value the gift and apportion that properly. In terms of what would happen if a gift was made of cash or a gift of property was made, we would suggest that things like how the bills will be paid need to be taken into account. So ensuring that you pay your fair share in terms of the utility bills and the expenses, so that you're not reserving any benefit. And then that would mean that the recipient of that gift of property and the granny annex at the date of death would avoid that gift with reservation. So it's really important that you seek legal advice when you're considering the transactions, to make sure that you're not falling into the net of actually reserving a benefit of the property. So in terms of preliminary considerations, whatever arrangement is under consideration is important, and there needs to be frank discussions beforehand about how the relationship will work. So issues that will need to be covered, as I've mentioned: how will the bills be paid? Who's going to pay the bills and in what proportions? Are there any facilities to be provided? Are there any rules around the use of rooms or the use of property? And other things like what level of support will be provided. The other issue is that if the relationship comes to an end, for example, due to the increasing needs of the elderly person, or there might be a breakdown in the personal relationship as well. So there obviously are options for sharing properties, and the granny annex one is the one here. And we just need to look at, the circumstances around if that person gains an interest in the property, what will happen if the property has to be sold, in the event of any financial problems or divorce. if the elderly person has to move into a care home and the local authority carries out a financial assessment. So it's very important to seek legal advice and to get the appropriate legal documentation drawn up to reflect the nature of the financing. So, you know, for example, if we have a gift, we need to make sure that it falls without those reservation of benefit rules. If there's going to be a co-ownership of property, we would need to look at preparing a declaration of trust. And if, for example, the parents decide to loan the children the money, we would need to look at drawing up a loan agreement and how that would be repaid, possibly when that person passes away, and that would be where the will comes into play. Okay, so I've covered that briefly. The last thing I think that's important to discuss in terms of our area of law is lasting powers of attorney, because obviously as people get older, you know, they will need, you know, the annex and possibly the younger members of the family to maybe help care for them. In terms of decision making, we need to look at, well, how do we give that person the right to make such decisions? Now, you may already have lasting powers of attorney in place. You might have drawn up enduring powers of attorney, which were valid documents in 2006, 2007, but then the new lasting powers of attorney came in after that date. So in terms of the lasting powers of attorney, there are two different types. There's one for your property and financial affairs, and then there's one for health and welfare. So the property and financial affairs one is obviously used to deal with your property and the selling and buying of property and your financial assets. So for example, the running of bank accounts, the dealing with investments and things like that. Your health and welfare one is to do with your personal health, and this one can only be used if you lose mental capacity. Now, this will allow your attorneys to make decisions about what type of care you would receive, if you had to go into a care home, what your diet would be like, your daily routine, what clothes you would wear, that sort of thing. And it can also cover matters of life-sustaining treatment. You can appoint more than one attorney, and you can appoint replacements as well. You can appoint your attorneys jointly, or you can appoint them on a joint and several basis, which means that they can make decisions either on their own or together. And often if you appoint them jointly and severally, if one of them cannot act, the power of attorney document is still valid and the other attorneys can continue to use it. You can also attach conditions, so they're called preferences and instructions within the documents. And you could also deal with the annex, possibly, if you have any specific requirements in respect of that asset within those preferences and instructions. Before you can use lasting powers of attorney, you have to register them with the Office of the Public Guardian. And then once they are registered, if they need to be used, they can be used straight away. So we can also help with the preparation of lasting powers of attorney. And I would say that if you are considering going down the route of an annex and you're speaking to a solicitor about the preparation of wills, it would also be a good opportunity to look at lasting powers of attorney as well. Okay, so that's briefly an overview of the agenda, but I'm guessing that some of you would like to ask me maybe some specific questions on wills or inheritance tax.
Yeah, please do feel free to ask any questions. You can raise your hand or unmute yourself or put something in the chat function. I'm sure Sarah will be more than happy to answer. Liz Butt.
I think you're muted, Liz.
There you go.
Better.
Hello, everybody. Thank you, Sarah. That was very useful. I'm just very aware, as you also pointed out, that things could change quite dramatically over the next few months with the next budget and things like that. Have you any advice for the timing of doing the annex now? Is it best to get on with it while things are in place as they are, or take a risk and wait? Because I'm at that sort of stage when I'm thinking about the timing of things.
Yes, I mean I've obviously we get bulletins from tax experts. The Labour government seem very focused on raising finance from taxing offshore trusts. So I think that's going to be their main agenda over the next couple of years. I can't commit an answer to that because I don't know what they're going to do. The thing is, the government make all these proposals and things take a long time to get through into legislation. What will usually happen is that they'll have a proposal, a policy, and then they'll have to review current legislation first and then look at actually making it into law. I don't think they will do too much yet on the nil rate band allowances. And, in terms of income tax, for example, they're keeping the thresholds the same for a number of years. I think they will probably keep the same with that. And they haven't really mentioned anything about lifetime gifting yet. So it's one of those things I wouldn't be dictated to by them. If you're going to consider doing something, I would get on and do it. You're not going to, it's not like this government, there isn't a way out of inheritance tax. It's still there. So it's not like you're not going to pay inheritance tax. I think it's just thinking if you're going to do it, do it properly, and seek sort of specialist advice on your set of circumstances, and make sure that if you're looking at gifting something, make sure that we document it properly. We take account of other family members in your will, and we look at making sure that if you are giving something away, you don't retain a benefit, and we'll look at how you do that.
Yes, thank you very much.
Is that okay? I mean, sorry.
Yeah. I know you can't be very specific, but that helps. And just a very quick one then is it on the whole better to give the money, this is for my daughter to build an annex on her land, to give her the money as a separate thing to build the annex, or for me to fund the annex? Is there a quick answer to that or not?
Well, you can gift it, whether it's cash or whether it's land, you're gifting. I think as long as you can be deemed to be paying a fair proportion of because you would share utility bills with her if you're living on her property. And so you need to make sure that you're paying a fair rate for living on that property. So I spoke to a colleague who specializes in sort of the sharing of properties and these annexes. And she said, make sure that you pay a fair proportion. She said, even if you pay actually more than your fair share. Also, she recommended, and I would always recommend, get the properties valued. Obviously, get the property valued afterwards, just so that you have a fair idea of what maybe a market rent would be for occupying that property. It's a similar analogy. I mean, I get phone calls all the time from clients saying, I want to give my property to my children because I don't want, if I go into care, I don't want to pay care fees. Now, under the care rules, if you gift a property away and you continue to live there rent-free, all you're doing is shifting the legal title out of your name. You're actually still beneficially living there. Now, you can get around it, you can get around the inheritance tax point by getting the property valued and paying a commercial arm's length rent for it. That's the only way of getting it outside of your estate. So you're not really, there's no real benefit in that way because you're still paying out for it. But you've got the 7-year rule that once you've given it away, it falls outside of your estate, but you've got to make sure that you're paying, your fair proportion of the utility bills.
Okay, so the PET rule of 7 years still applies, even if you're paying the full rent for it, does it?
It does, yes, it does. Because what you're basically doing is you're making a gift of whether it's cash or property. You're making a gift of an asset, and as long as you survive 7 years and you're not reserving a benefit, it will fall outside of your estate. Is that okay?
Yes, thank you very much.
Okay.
Yeah, good questions, Liz. Thank you. Any other questions for Sarah?
Please ask away, even if you feel that it might be a silly question. Or, I mean, I did look at a previous seminar that a financial advisor had done for iHus, and there were questions about how you redress balances between children within the family. And I would suggest that you look at, if you've got a current will, you look at the will, but you can also put in clauses in the will to take account of lifetime gifting, you know, to redress that balance. So that might be something that you would consider if you've got more than one child and, you know, you're having an arrangement with one child and not another. You know, it might also be that, you know, things you could make a loan to the child and lend the property rather than gifting it. Or you can, you know, put a legal charge, if it's mortgage free, you could put a legal charge over the property, almost as if you were a lender. So there are different ways that you can structure it legally, and it's just looking at what's the right fit for you and your family's circumstances.
Yeah, that's a good point, Sarah. I think it's one that's often brought up, isn't it? Is how do you make it fair amongst the family? So that's a good point.
Yeah.
Any other questions, anybody?
Could I just ask, do you all have wills at the moment and lasting powers of attorney? You do? Good. Oh, that's really good. Okay, that's good.
Excellent. Well, thank you, everybody. I'm going to say a massive thanks to Sarah. I think, you know, this
Oh, I
type
don't
of...
know whether, does Lorraine's
right.
husband... Hello.
Hello, it's me. I said, I don't want to do the will again because it was agony, right? With the particular solicitors we picked.
Oh dear, okay.
Well,
Oh dear.
I think only my question is, I've got 3 daughters.
Right.
We've got the planning permission to move to the middle girl's house.
Okay.
Obviously,
garden.
And in her garden. And that I just want to make sure that we leave it nice and clear that all 3 girls benefit equally, right? And
Yes.
I'm not sure how to do that, right?
I think that's in the will.
Well, yeah, I mean, in the will, I'm obviously not sure what your will states, but you know, yes, you need to obviously make sure that your 3 daughters are benefit from your estate equally. Are you providing the cash for the annex then, and it's on her grounds then? So she's retaining her property, but you're building the annex and providing the cash for the
Yes.
Yeah. So are you selling your property then?
Yes.
Yep.
Okay. So one option could be that your daughter's property is valued before the annex is built, and then it's valued after the annex is built.
Yeah.
And if you treat your daughter as then, if you pass away and your daughter owns the property and the annex, because obviously it's on her land, then she might be treated as having an advancement from your estate.
Yes.
So in terms of the sale proceeds from your previous property, I don't know whether that's being used towards that. Obviously, that needs to be taken into account in the wills. If your daughter's almost receiving, we call it, it's called hodgepodge actually, but we call it, it's accounting for lifetime gifts. So your daughter probably is deemed to have had an advancement, and then maybe the will needs to look at redressing that balance. So my suggestion is that, you know, have a look at the will and see what it does. But it might be that you haven't made provision for that advancement, and you might need to update your wills to include a clause to that effect.
Yes.
You'll probably see on the final slide, I'm happy for each of you to give me a call just to talk through your personal circumstances. And because obviously, you know, things are confidential, you probably don't want to go into too much detail about your finances. And we can talk about whether you do sort of update your wills. You know, obviously you don't feel obliged to use us, but I always recommend it's a good idea when you're doing some sort of financial transaction to look at the wills, because, you know, it's something that you do need to review quite regularly anyway.
Yes.
I mean, I do always say to clients, get your will out every 5 years or so, pull it out, have a look at it, because circumstances do tend to change, and just make sure it's still fit for purpose.
Okay.
Okay.
That's all
So,
right.
thank you. Yeah, thank you
Yeah,
very much.
that's great.
No problem.
That's lovely. I've got your phone number written down
Yeah.
now.
That's great.
Yeah.
Yeah.
I think that's...
Wise words, Sarah. Thank you for that. Any
That's
other
okay.
questions then? Any other points anyone wants to raise?
Can I ask a question?
Yeah,
Of
far away.
course. Yeah.
So, my parents are already living in a property that we want to put an annex onto, with a view to me as one of two children moving in. How does that work, or how could it work in terms of, could they gift to me and my husband and family, or would we pay rent to them, or we're just a little bit...
Yeah, well, that's entirely up to you, and some of it's to do with, you know, it's not a legal, some of it's not a legal matter. It's how you consider what is fair. Funnily enough, I had a slide that I did a seminar on. It's quite a famous image of three children appearing over a fence, and they were all different heights. And the steps that they needed, the blocks that they needed to look to all be able to see over this fence were different sizes. Now, the whole sort of point of that slide was that, you know, being fair doesn't necessarily mean being equal. So it might be that, for example, you don't pay a market rent, but you're there on hand to help look after your parents if they need that. So I think it's really, from a practical point of view, I think it's always really important to have discussions with all of the family members about the situation. Because more often than not, when I've seen families, you know, after somebody passes away, there can be challenges to wills and things like that. Communication at the outset is really important. Now, it might be that you look at what you think is a fair value to put on it. If your parents are retaining the ownership of the property, it might be that you live there rent-free, and then when your parents pass away, the property is split equally between, you know, you and your sibling. That's one option. The other option is that you know, if you're selling a property and you have capital and you're living there rent-free, you might think it's more suitable, you know, to pay a little bit. You could purchase the property from your parents. You know, there's lots of different options that you have. And, you know, obviously tax and inheritance tax is a driver, but there are other, you know, issues to consider as well. And I think looking at what is fair overall. So I would recommend that you all sit down together and look at, you know, what your parents want, what you think they might need in the future, and financially your circumstances as well. Does that? I know that's not a very accurate and
does that affect inheritance?
But I think it's important to sort of look at everything, and I would say communication is very important.
Yeah. So we need to seek some advice, really, then, don't we, around inheritance tax and things like that?
Yeah. I mean, if your parents are retaining the property, then they will deem to own it when they pass away. It's when they're gifting the property and it's going outside of their estates that you need to make sure that it does fall outside of their estate, and they're not retaining a benefit in it. Because if that happens, although they're deemed to have given it away, for inheritance tax, they're still treated as owning the value of it, and that's when they can, you know, it can come into problems for inheritance tax planning.
Right. Okay.
Does that help a bit?
Yeah, thank you.
Thank you.
That's okay.
Any
Are there
other
any more?
questions?
Not from us. We're good.
No. Anyone else? No, lovely. Well, a big thank you to Sarah. Like I said, it's this kind of thing and discussion and topics, a bit of a minefield, isn't it? And everyone's circumstances can be different, but we really appreciate you, Sarah, for such clarity.
That's okay.
And we appreciate, and obviously Sarah's details are on the screen there. A very good firm, and her and her team can certainly help moving forward. So worthwhile speaking to her and seeing how she can assist you in the future to ensure it's all fair and you can have your annex and enjoy that kind of living arrangement with your family. So thank you all for attending. If you do have any questions, you've got the details on the screen there, so please do feel free to ask either myself at iHus or Sarah Wilkin Chapman, and I'd be happy to help. But big thank you, and we look forward to seeing you on the next one.
Right, thank you very much.
Thank you very much.
Thank you.
Thank you. Thank you.
Sarah, bye. Yep.
Mhm.
Turn it off here. No. No.
Cool, thanks for that, Sarah. I really appreciate that.
That's all right. Was that okay?
Fabulous, yeah.
It's
Fabulous.
a difficult one sometimes, isn't it? But I think if people want to give me a call about their personal set of circumstances, that's no problem.